Markets today.
Yeah, good afternoon, Nzinga. Well, certainly still some steam coming through then from those jobs reports that we got on Friday from the United States. 128,000 jobs were then added to the U.S. economy in the month of October, a little more than expected. Yes, the slowdown is certainly visible in the U.S. jobs numbers, but slowing down a whole lot less than many had expected. So things are certainly still boisterous in the U.S. economy. We also saw China, of course, and the United States. They're expecting to come out with a trade agreement very soon, and it seems that things are headed in a positive direction on that front. So clearly, things are headed a whole lot better. There's still a whole host of news as well on the local front. South Africa still being plagued, of course, by the news from that MTBPS. We saw, of course, Moody's lower South Africa's credit outlook to negative from stable as well on Friday, and that will continue to place a whole lot of pressure on South Africa. Yes, around 3 months or so until the next plus review, which could actually be after the February budget. So that means it's more than 4 months actually that we will perhaps get another review from Moody's. A downgrade there will have a full house of downgrades then, and we would sit in negative territory across all three. So a whole host of news and even some equity news then as well when it comes to that market picture. Let's unpack all of it just after this market update. Well, as you can tell there, a slightly better picture with the South African currency having fallen beyond 15 Rand against the US dollar late last week, of course, after the medium-term budget policy statement painted a very negative picture of South Africa's economy. But having painted that negative picture, of course, the one thing you'd certainly hope for and a continued hope to pick up South Africa's economy is more investment. So this week does, of course, see the rise in the beginning of the investment conference, the second South African investment conference then happening this week. This really just lays out exactly what has happened from last year's investment conference. We saw a project total of around 300 billion being raised. In general, we saw the cost of close to 60 billion, should I say, with regards to certain projects. The pre-implementation of those projects had cost around 20 billion rand then as well. Implementation of that project itself, though, has perhaps been lagging ever so slightly, but still around 250 billion rand in terms of that. Product launches themselves have cost around 40 billion in terms of the currency. Exactly how much will we raise this time around is the question at hand this time. What exactly can South Africa do? President Cyril Ramaphosa certainly needs to be on the offensive on this one now and certainly paint a picture that South Africa is going to move in the right direction. How will it do so over the next couple of months to avoid a downgrade by Moody's to non-investment grade? That becomes the painful saga that South Africa finds itself in. 0.5% growth for 2019, seeing the debt to GDP ratio rise to around 60.9%, if not 70% then in 2 to 3 years time. So that's certainly going to hurt. Eskom is still going to get assistance from government over the next 10 years, and we still need to try and save 150 billion rand for 3 years, or 50 billion every year. Where will all of that come from? It's certainly going to be a tough time, and I can tell you right now that having gone to the World Cup just this past weekend, President Cyril Ramaphosa will certainly be happier to have been dealing with something else for a short while. But it's time to knuckle down. Speaking of knuckling down, let's have a chat with Bright Kumalo now about the market picture and exactly how things have fared thus far. Of course, we've even had news of Taste Holdings deciding to forego a whole lot of Taste. Bright, thank you so much for the time. Appreciated. That food saga with Taste Holdings, that's quite a biggie, is it not? I mean, now they decided to go just full-on jewelry.
Well, I think they didn't have many options, to be quite honest, because of that. You know, they're in a debt spiral, and they could use any cash they could get. And that 7 million rand offer, well, it made sense at the time, I guess. And
is it not too low? I mean, you find it's just 13 restaurants. This is 13 Starbucks restaurants that have been sold off for 7 million rand. For some reason, for me, it just feels very low.
Well, if you consider the setup cost of each Starbucks store, which the flagship one costs a fortune, and then the average one is about $5 million. So it does show you that there was a lot of money thrown into that thing, and unfortunately, just because of where the company is financial wise, it didn't make any sense for them to continue going forward. But it's good news for the new owners because they can retire the 16% debt that they got from Conduit Capital, and they can go to public markets and actually raise debt at comparable prices between 9 and 10%, which could be a sustainable business going forward. But good for those guys. And the bag holders, unfortunately, are the current Taste holding shareholders there. Unfortunately, there's no way of painting that one pretty because it's ugly.
Is Taste still a viable business on the whole?
Well, I don't know. It remains to be seen, right?
Yeah.
I wouldn't be buying any Taste holding right now. I'm not excited exactly by cheap jewelry.
Look, my taste buds aren't filled either. That's for sure. We still also had some company news. Shoprite having an AGM and some thoughts and a quick update as well this morning.
Correct.
Is there hope? Christo Wiese having some sort of less influence is the hope, according to less investors?
Look, I'm less interested in Christo Wiese, but more interested in the operating business itself.
Yeah.
If you look at the different operations, the outside of South Africa businesses didn't do so well because of the devaluing of different currencies in Angola and in Nigeria, and obviously the xenophobic attacks and the backlash thereof being the red company that is South African, getting a lot of backlash outside of South Africa, down 4.9% in terms of sales that are non-South African, while the South African operations did well, 10.9% up in those operations. A great uptake in the point system. I think they call them extra on the checker side of things. In 1 week they had over 1 million people who've subscribed to those rewards programs. So it's very interesting. It's growing very fast. It shows you just that how many households in South Africa use those brands. But the shining star apparently has been the likes of YouSave.
Sure.
So it's all looking good.
So really on the lower end of the scale, if you want to call it that. Of course,
yes.
Right? So
because they've always been good at keeping a price inflation, muted to make sure that people still, go there, increasing, fortunately, their volumes and foot traffic as a result. So, well, foot traffic, and then you see the volumes.
Of course, yeah. All right. Well, in terms of foot traffic, one of the things that have helped Liberty to date has been the likes of Sandton City.
Liberty 2 degrees, yes.
Exactly,
yes.
All right, the likes of Melrose Arch as well. So going and focusing a whole lot more on your shopping centres seems to have helped them a little bit more. And now they've sold a building in Cape Town for around 370 million rand, and they've decided they're going to go full on into these shopping centres. Good move?
I think this is a brave move. I mean, they know, where the consumer is, and they know that, office space is not where it's at. Where it's at it currently, wherever there's foot traffic, and currently, mall seems to be, doing fine in South Africa. I mean, we could talk about, the apocalypse we've seen in the US and other markets, but I mean, you've seen in Spain how Villa is doing well there, where traditional malls are still fine. I think South Africa is still there, and maybe the operational strategy that Liberty 2 Degrees is taking is probably the right one for the next maybe 5 to 10 years.
Yeah, but divesting entirely out of a space that who knows where it goes from here. This is to say that you don't see any value in it going forward?
Look, it's also very hard to, compete with someone who's got unlimited funding like, WeWork. Well, I don't know if they still got unlimited funding right now, but the biggest shareholder there, which is SoftBank, which is going to be the main shareholder right now, still has a lot of money. And there's a lot of that, hot desking type culture that is coming up. So it's really killing office right now. So it doesn't make sense for those businesses to carry on in that space. I mean, if I was a small business and I was looking at alternatives where I've got a 8-year lease, that's escalated at between 8 and 10%, or a lease where I could stay 6 months, in different offices where I jump around for free. I'll do that. I'll take that before the 8-year.
Why the heck not? Okay. Well, we saw some bad news out of the MTBPS last week. We saw Moody's then begin to lower South Africa's outlook. the rand is holding steady, 1482.
Yeah, that could be, a lot of different things that are happening right now. But like you're saying, we're looking at a lot of net sellers of South Africa and South African stocks, which is counterintuitive with what's happening currently in the currency. I guess it's mostly a dollar story again. Yeah. Because I mean, if you look at everything, is against us.
Even though there was a slowdown in the jobs numbers, not as much as everybody predicted.
Yes.
And yet still it seems to be the weakness though in the currency.
Yeah, I mean, they're talking about the likes of Ray Dalio talking about we're gonna see GDP contraction in 2020 and 2021, probably a recession, which means two consecutive negative GDP quarters back to back. So it's going to be very interesting to watch. Those guys tend to know more than I do, so I'll believe them.
We'll take that.
And they've got more experience.
Well, they do. But for now, we'll get to the experience part a little bit later. But Bright, thank you so much for the time. Really appreciate it there. That oil price still hovering above that $61 a barrel mark. Haven't seen a bit of weakness of late. It's certainly picked up and stayed and hovered above that $60 per barrel. We also saw the gold price stay just below that key $1,500 fine ounce mark as well. So that is the state of the market for now. Where does the JSE end? Well, it's currently in the green, around 0.5% better off, but will it stay there throughout the day? We'll certainly find out. For now though, that's where the buck stops. It's back to my colleague Nzinga right after this.